Merlin has delivered over 12% top-line growth in 2017. The main drivers of that have been our highly successful new business development program. In particular, more innovative, imaginative accommodation that we're putting into our theme parks around the world. In addition, we've also opened 6 new Midway attractions in multiple countries and across multiple brands. And probably the most significant was the opening of our 8th Legoland park in Japan in April. On top of that, I think the result reflects the increasingly international flavour of the Merlin portfolio. Over 70% of our profits are derived from outside of the UK, and of course a key part of our strategy is to improve on that in the future. In terms of our like-for-like business, it's been quite a difficult year for Merlin. We started the year with a lot of momentum across all of our businesses, and indeed we were expecting to see that continue through. However, the inflection point came with the terrorist attacks in the UK, and what that did, which is something that we've seen happen before, was cause quite an immediate fall-off in our domestic visitation, followed by, after a lag, a fall-off in foreign visitation, particularly to our London attractions. But in this case, I think also the Manchester attack meant that there were wider ramifications, and it also hit our UK theme park estate. Against the very difficult external conditions, it is still pleasing to see that other parts of the group are continuing to perform very well. We've seen very good performances in Midway Asia. The Legoland park estate generally overall has done very well off the back of continued investment, resort positioning, and in the early part of the year there was a good effect from the Lego Batman movie, which we were very successful in putting promotional and PR activity in place around that. So generally, I feel that the estate has really lived up to what we're looking to do, which is a diversification. There are 2 things that drive Merlin, really more than anything. First and foremost, we get out of bed in the morning to deliver safe, fun, memorable experiences to our visitors. But from a business perspective, what we're mainly driven by is to deliver strong returns on capital. And the truth of the matter is that these external environments, and particularly the upscale of terrorism attacks, particularly in Europe, we don't think they're going to go away anytime soon, sadly. And as a result, we've decided that to keep on spending capital against attractions in those challenged markets is not the best way to get a good return on capital. Consequently, we're going to take some of the capital out of the existing estate, particularly out of the Midway and Resort Theme Parks operating groups, and redirect that into some of our other growth drivers. Obviously, we will continue to roll out Midways and we will continue to open new Legoland parks, but we're also going to put £30 million of that £100 million against a productivity agenda that will be aimed at actually combating some of the cost pressures facing the business today. In terms of the existing estate, it's important to note that the £100 million that we're sort of stripping out from versus our original plan is actually still leaving a substantial amount of investment in place. And we will largely be taking that money out of the Midway and to a degree the Resort Theme Parks operating groups. But we will still be investing in the essentials of health and safety and repairs and maintenance. And we will also be investing in show capital in those operating groups where we think we can deliver good returns on our investment. In terms of the way we're looking at Merlin's growth trajectory, we've traditionally always presented a base model of delivering around mid-single-digit EBITDA growth from our existing estate by spending CapEx broadly in line with depreciation, and another mid-single-digit EBITDA growth from our new business development program, mainly Midway rollout, Legoland parks and new accommodation. In the future, that will change. It will move away from that 50-50 to being more like 1/3, 2/3. So what we really are going to expect is between 1% and 3% growth coming from our like-for-like businesses, on the back as well of having reduced existing estate CapEx versus our original plans by £100 million over that 4-year period. And then we'll be looking for 6% to 9% growth coming from our new business development growth drivers. And that is particularly the accommodation, where we'll be increasing the pace of accommodation rollout. Midway rollout pretty much as we've done before, but with some exciting new brands coming in. And of course, Legoland Park, new additions, and in particular there, the standout project would be Legoland New York, which, subject to final confirmation, will be a major owned and operated new addition to the portfolio. So in terms of the 2 new brands that we've announced today, This is just the latest of a long-standing new business development, new brand development process that Merlin Magic Making have been undertaking. You've already seen some of the manifestations of that previously in Shrek's Adventure, and probably more importantly now Little Big City, which was launched in Berlin this year. But the other brief that we put was to try to actually tap into other parts of the market that we currently were not in. We saw when we put CBeebies into Alton Towers that a whole new market opened up to us that was actually there below our core family market. And so we wanted to develop a product there, and it may be a portfolio of products, that really was able to tap into preschool. And we alighted on Peppa Pig as being one of the most powerful IPs in the whole preschool area. And so we have signed a deal with Entertainment One that gives us near global exclusivity to roll out location-based entertainment concepts against the Peppa Pig IP. On the other scale, and if you might put it in the old Monty Python terms of now for something completely different, we were also looking at what people were looking for out of what is loosely termed the experience economy. And this is a little bit about the way people are now expressing the way they want to spend leisure time, not just about having fun, but having the ability to accomplish something, create something. And we started working on a proposition that would involve giving people the opportunity to skydive, to scuba dive, a whole load of those sorts of activities. And we were in the process of pulling that together and doing the research when one name just consistently came out, and that was Mr. Bear Grylls, and have worked subsequently with Bear Grylls and his team to really move what is now the Bear Grylls Adventure into what I think will be one of the most exciting new propositions to hit the location-based entertainment market in generations. The next big Legoland Park project that we're moving on to is Legoland New York, which, subject to some final formalities, we're hoping to announce in the near future. And we're really excited about this. We've been looking at the northeast seaboard of the United States for some time as a very, very strong location for a Legoland park. The USA generally is a very strong market for the Legoland brand. So, you know, the site that we're looking at in Goshen, we believe we can make a very, very successful Legoland resort there with a hotel from the beginning. So watch this space, but very exciting. I think Merlin is leading the world market in pushing out new, high-quality, innovative forms of themed accommodation at its theme parks. What is exciting about this is it is the ultimate win-win for us, because as we put in new themed accommodation at an Alton Towers, a Guardland, we are achieving our strategic objective of moving them from being predominantly day trip attractions to being places people will come from further afield to stay for 2 or 3 days, thereby obviously giving us more commercial benefits. At the same time, the accommodation itself is highly profitable and giving us very good returns on invested capital. This company continues to perform despite some very, very aggressive external environments. And more to the point, has been able to flex a very strong set of growth drivers and strategy to give a very convincing and I think compelling argument for why that growth will continue in the future. You know, we have got a proven track record in our ability to roll out new midway attractions, add accommodation successfully to our theme parks to turn them into resorts. And even within our existing estate, we think we can point confidently to continued growth